Now that the Q3 results for Tesla is out, we have a much better idea of whether the current stock price of around $430 per share is actually sustainable, and more importantly, we can do some analysis here to figure out if Tesla stock is ready for a breakout. Now from the earnings, the margins Tesla was able to pull through for Q3 absolutely were impressive. Like, it blew me away honestly, because this gives us a glimpse as to what we can expect in the future as the company ramps up production even more. Gross margins for automotive, their cars, was a whopping 27.7%, and that is massive, and it's increasing hugely year over year, quarter over quarter, no matter what way you look at it. But why is gross margin so important? Well, it tells us how much money Tesla is pulling in for every vehicle that they sell. So for example, every $100 in revenue, they're pulling back around $27.70 in gross profits. And this is important because it means as Tesla scales, revenue starts exploding. It gets in the tens and hundreds of billions of dollars over the years. That's going to equate to a lot of gross profit, and eventually that is going to trickle down to the bottom line and make Tesla a very profitable business. Now for fiscal year 2020, Tesla reiterated that they plan to still sell 500,000 vehicles, which would be a huge milestone for the business. Think about it, they're making anywhere between 20 and almost 28% of gross margin here this year on their vehicles, and they're about to sell 500,000 this year, so that's a lot of money that the company is pulling in on the top line. And yes, I understand this is just top line gross profits. It doesn't mean this is the actual money that Tesla gets to keep. However, like I said, this is a step in the right direction. This is showing us profitability is sustainable in this business. Now this in turn has helped two important metrics, their operating cash flow and free cash flow, really see exponential growth in such a short period of time. And this chart shows us that they hit a record for both of these metrics in Q3. And guys, things are just getting started. So why do I think that things are just getting started for Tesla? Well, smash that like button down below and I'll let you know. So here's the secret. Tesla right now is selling 500,000 cars this year, but they expect within the next 10 years to sell around 20 million cars. That is a substantial increase from where we are at today. Can they achieve this? I think so, because Tesla's biggest problem today is their physical limitation to sell more cars. Here you can see all the factories that Tesla has, and so far only 3 of them are producing the cars, the S, 3, X, and Y. Fremont is literally firing on all cylinders, and Shanghai only opened this year and is only doing Model 3 so far. Eventually they'll be doing Model Y at Shanghai as well, and then the new factories should open up in the next few years, including Berlin and Texas, and with this will come new vehicles like the Cybertruck, the semi-truck, and the Roadster. I'll say this again, Tesla is just getting started, and there's no denying this. Now let's kind of shift over and talk about the stock. What is going on with Tesla stock? Is Tesla stock ready for a breakout here? And let me also touch upon what I'm personally doing with my position in Tesla. So here's Tesla stock today, and we can see the run it's had, but it's no secret, guys. We all know that Tesla's been doing well, but what I want to outline is a couple of things which caught my attention. First, we see that we have a very stretched chart here on the weekly, well above the 50 moving average, which is that green line. Moving averages are kind of like magnets for stocks. So when a stock moves too far away from it, it tends to pull back at some point. Either if it's too high, it'll pull down. If it's too low, it'll pull back up. These are typically metrics that are used by traders and some investors like myself as well, which is why it works so well. If we look back to March when the market crashed, we can see that the stock held the 50 moving average on the weekly and even briefly touched the 100 moving average, but then bounced off of that very quick. This is because investors saw value at those prices, they saw Tesla test that level, and they essentially bought the dip. Looking at this chart though, my honest opinion is that I wouldn't say that Tesla stock is ready for another breakout just yet, and I think that this run, as awesome as it's been for shareholders like myself, needs a bit of cool down and consolidation. There needs to be some time for this stock to breathe, and stocks, guys, you have to understand, move in waves. There's no stock that just goes from 0 to 100 and stays at 100 forever. It's going to move up over time if it's a good business, but it's going to have its ups and downs along the way. Right now, Tesla has been going through a phenomenal up ever since the March lows. It's pretty much been moving up in an exponential line, and I think it's time for it to just take a breather, pull back, come down to healthy levels, and then start moving higher once again after that. So with Tesla here, we're at a turning point where Elon and the team have thrown everything they can at the stock to try to pump it, and it's worked very well so far. But no matter what way you want to slice it, a $400 billion valuation for Tesla at this stage is an expensive valuation. Now, what's more likely to happen, in my opinion, is something like this, where we pull back, like I said, maybe to around the $250, $300 per share level, consolidate for a short period of time, and then we gear up for the next ramp up in the stock, where we could possibly see valuations of over $500 billion or more. That is the true potential of Tesla long term, and that's what excites me about this business long term. This day-to-day movement of, a stock being up a few percent, down a few percent, I honestly could care less if Tesla moves a few percent here and there on a daily basis, because I'm not looking to sell the stock in the next week, in the next month, in the next year. I'm looking to hold Tesla for as long as possible, as long as I see this company growing, entering new markets, disrupting, just doing Tesla things. I'm honestly in Tesla to make many multiples on my money. And if you've been following the channel, you know my cost basis is around $54, $55 here after the split. So I've already made a few multiples on my investment, and I think over time I have potential to make many more multiples. So anyways, if you're holding Tesla stock today, what should you do? Well, I want to throw this out there first off. I have to. I'm not a licensed advisor, so this is not financial advice, but there are certain situations where it may make sense to sell some Tesla stock. Now, say you've been holding Tesla for a while, you have some pretty good unrealized gains, but you need the cash in the short term for something else. Well, maybe then it makes sense to kind of scale out a little bit, sell a bit of your position, and then use that capital for whatever you need. Personally, I wouldn't sell out completely of Tesla. I'd still want exposure, especially if you have a good cost basis on it, and just kind of do the opposite of dollar cost average out of your position, sell out, maybe on a weekly basis, something like that. So you end up with a pretty good sellout price that you're happy with, and there's no FOMO if, you sell today and the stock moves up 10% tomorrow or something like that. Now, what I'm personally doing is, like I said, I'm not buying Tesla at these prices, at least not yet, but I do have a Tesla fund, if you will, where I have cash set aside to put into this business if an opportunity presents itself. Now, I think Tesla is attractive around $250, $300 billion valuation, and I do think that it's possible that we get down there on this kind of consolidation that I'm expecting the stock to go through at some point in the near future. If you can get Tesla at, say, a $250 billion market cap, that is a very attractive price point, because if you believe, like myself, that Tesla can easily be a $1 trillion company, possibly even a $2 trillion company, that would result in many multiples of gains on your investment if you can get in at those prices. But hey, one thing I always preach on this channel is that it is absolutely impossible to predict where the stock is moving over the short term. Over the long term, I think most of us are in agreement that Tesla is going to be a massive company, possibly bigger than Apple, Amazon, any of those businesses. However, over the short term, anything can happen. Maybe we get hit with some unexpected news, world news, something happens, and that just pulls the whole market down again, which would of course pull Tesla stock down as well. So that's why it's impossible to predict the short term. However, having cash set aside for those opportunities will result, trust me, will result in great long-term gains. Either way, guys, hope this video was helpful. As you know, I'm a Tesla bull. So if you're not, if you're a Tesla bear, comment down below on some points to rebuttal things that I've discussed in this video. Love to hear your thoughts and comments in the comment section down below. But either way, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.